today's session of Visual Jforex, we will be continuing to work with the commodity channel index, the CCI indicator. On the Visual Jforex board, we will see how we can efficiently design the algorithm for trading on our behalf. So this is the setup so far. In prior session, I had carried out the instrument subscription. Then the position amount was defined at 0. And as I had explained in the prior session, the configuration is going to involve multiple layering, different time frames involving 4 hours, hourly, and 15 minutes. So I have taken into consideration all these blocks of different time periods, starting from 4 hours and all the way to even 10 seconds. Historical candles cluster for looking at the price volatility, and to retrieve the individual variables, this loop viewer, and then to take a look on the immediate price action, these last 15 minutes get historical candle, and to pinpoint the exact entry point, these 10-second get historical candles. Okay, so now in today's session, we will see how we can design the buy side, and for that I will again give you a refresher. For the buy trade to happen, we want the underlying instrument to be in oversold territory. So somewhere here we will need the CCI value to be below -100, and that will be indicative of the fact that underlying instrument has corrected a lot, and we might see some sort of retracement taking place. So that will be the time we will be looking to initiate the buy trade, and similar situation should be prevalent on the hourly time frame also. So if we now let us go back to the exact point in time, it was around 5 GMT 30th March. So we will see. So this is 30th March, 5 GMT, somewhere here. And as you can see, we do have these hourly chart also showing that CCI indicator is in oversold territory. The value, output value, is below -100. And then when we will see that there is some buying momentum coming in, only then we will be looking to initiate the buy trade, and for that we will change the time frame to again 15 minutes, and we go back around the same time. So somewhere here, when we will have that CCI value on the 15 minutes time frame is climbing above 0 from below 0. So I think somewhere here it is happening one time, and after that here also, and then later on. These are some of the instances. So provided other conditions are in place, the buy trade might be executed somewhere here. We don't really see significant up move, and I think for a significant move on the higher side, we will have a couple of wrong trades here, and then this will be the move on which we are getting this right. And to avoid this kind of sideways trajectories trades, I think we can rely on the candle cluster, historical candle cluster, and there I am going to define that there should be good enough momentum. So as you can see, there is not much of a momentum, and if you consider the price action over last hour or 1 hour and hour and a half, we don't really see much of a difference between the high and low. It is somewhere close to even less than 10 pips. So that condition will take care of such situations, and only when we have significant up move, significant momentum, only then the trade will be initiated. So I will be adding that condition also, so we don't really go for the execution of the trade here, but rather here when we see that price momentum is showing strong upward bias. So that's the logic behind the algorithm. Now let us go back to the Visual Jforex platform, and here first thing we will start with the calculation expression block. and in it we will be looking to create new variable. We want the price difference between the high and low for last 4 15 minutes candle to be more than 12 pips at least. So this candle amount needs to be changed to 4. Okay, and here we will create 12 pips value. For that, one new variable needs to be created, and it will be minimum pip difference. This will be 12, and this 12 needs to be multiplied by the instrument pip size, default instrument. Okay, and this will be a1 into a2. All right, now we will be looking at actual pip difference between the minimum and the maximum. And for that you will have to take FHL's high and the lowest value. A1 minus A2 and this will be actual difference. Okay, so we have carried out this calculation. Now all we have to do is define the conditions for the execution of the trade using the if-else block. So for the time being, we will stop this addition of blocks here, and I will bring in multiple action. Later on we will need to add a couple of blocks more, and then we will disconnect this and again join it back, but for the time being start adding the blocks for the buy trade. For sell trade, if the need arises, we will carry out fresh calculations. So here we will need the CCI 11's value to be below -100. First input less than second input. Then CCI 12 should also be below -100. First input less than second input. And then we will shift our focus to 15 minutes CCI values, and here first it should be below 0 and then it should go on to rise above 0. So for 15 minutes 0 is going to be our decisive marker. So CCI 16 needs to be above 0. First input greater than second input, and CCI 17 needs to be less than 0. Okay, so first input less than second input. Now we will consider the price action, if there is enough of momentum or not. For that, we will be comparing actual price difference, pip difference, to minimum defined pip difference, and APD should be greater than MPD. First input greater than second input. Okay, then additional requirement is also going to be that last 15 minutes candle, which is candle 19, should have its closing value above the opening price. For that, we will see that this closing value is greater than opening value. First input greater than second input. And then whenever the price starts to rise above this 15 minutes candle, candle 19, we will look to initiate the buy trade. So for that, we will have to take into consideration candle 19 candle close for both these blocks and compare it with candle 21 and candle 22's closing values. Candle 21 has look back period of 1, which means it is last 10-second candle, so its closing value should be above the candle 19 candle close. First input greater than second input, and here this one candle 22's candle close should be less than candle 19 candle close. And I think most of the conditions have been defined. So now we will bring in the execution block. Market open, open at market, first input less than second input. Okay, default instrument, it will remain as it is. Trade amount, I will change it to 0.1 million. Slippage, I think 2 pips slippage is good enough. Stop loss, take profit. We will need to go back to the chart and see what are the appropriate levels of stop loss and take profit. We can make it dynamic or we can keep it constant, static. We can use both the methods. So we will go back to the chart and given the fact that we are working with the 15 minutes time frame, but at the same time we also relying on the larger time frame. So I think we can indeed look for keeping the target price wide and stop loss sharp. So suppose if the trend reversal happens from that point in time, we can profit a lot, and if it doesn't, then also we won't be losing much money. I think we have one block left. No, somewhere. Let me color code this. Okay. Now we have got the chronology right. Okay, now let us go to chart to see what kind of stop loss and the take profit will be appropriate. So we will stick with this example only. So as you can see that the underlying instrument has been declining, and somewhere here we are looking to get involved for the possible reversal. So and that did go on to have happen to. And I think if we consider that Euro USD tends to move around 60-70 pips in a day, and if we are fortunate enough, we can of course profit from 20-30 pips in a single take. And at the same time, we don't really have to keep the stop loss much wide, because as I said, if we happen to be wrong, we will be getting next opportunity. So what I will do, we will go with a fairly sharp stop loss, say 7 to 8 pips, and the risk reward ratio we will keep it in multiple of 3. So if we are keeping the stop loss of 7 pips, we will be keeping the target price of around 21 pips. So that will get us the risk reward ratio of 1:3. So I'll change it 7 pips, and this one will be changed to 21 pips. So this time around we are working with the market open and static stop loss and take profit orders. So this won't be dynamic. Now in next session, we'll get started with the sell side. For that, you will have to wait till the next session. And I hope you have been able to understand how the buy side was designed in today's session. See you next time. Till then, goodbye.